Well, it's been a while since we last talked about Las Vegas, so is no news good news? Well, it's starting to look that way until fourth quarter. Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons with your Vegas update. You know, we feel bad piling on the Las Vegas apartment market. Most in the commercial real estate industry are probably hoping to see some better numbers in 2012, particularly after some pretty encouraging numbers in third quarter. So was Vegas finally turning the corner? Unfortunately, no. Fourth quarter was disastrously bad. Here's a look at quarterly revenue change over the past few years and look at Q4 12. Revenue's down 3.6%, worst decline in 4 years. Revenue change, remember, is the combination of the shifts in both occupancy and in rent. Occupancy here dropped 1.2 points in Q4 and rents fell 2.4%. And now here's a look at annual revenue change by quarter, and you can see it all here. After 4 straight quarters of gains, Vegas is back in the red. Revenue's down 2.1% in 2012. And here's a look at how Vegas stacks up nationally among the core 50 markets. It's a familiar spot, last place. The only market with negative revenue change in 2012 was Las Vegas, and only 4 other spots were even under 1% growth, those being Virginia Beach, Norfolk, Hartford, Riverside, San Bernardino, and Indianapolis. So what happened? What more could possibly go wrong for the Las Vegas apartment market? Well, obviously the big issue in the past was the local economy, was hemorrhaging lots and lots of jobs. And in the past couple of years, Vegas has actually started to show some modest job growth. So that really hasn't changed. But here's what has changed. Housing demand has shifted dramatically towards single-family homes, both rentals and purchases. According to the local realtors, 2012 was the 3rd best year ever for home sales. 45,000 homes sold in 2012. More than half of that, 55%, were cash sales. And cash sales tend to mean investors buying up properties, and then they're more than likely going to put those out into the rental pool. And that, of course, is competing to some degree with apartments for housing demand. And on top of that, we're obviously also starting to see more renters leaving apartments to go out and purchase homes now that prices appear to have bottomed out and are actually climbing again. In fact, in 2012, median home prices jumped 24.2%. And we should still note, though, that the median home price is still relatively affordable at $149,000, and that's still less than half of the pre-recession peak. But enough movement that we're starting to see some renters thinking it's time to make that jump back into single family. So apartments have taken a hit. Let's take a quick look at occupancy and rents, starting with occupancy, down 120 basis points in Q4 and down 40 basis points year over year. That was the Metro's first year-over-year decline in 7 quarters, and occupancy now sits at 90.9%. Nationally, only Memphis had a lower rate. And annual rent change, the numbers have been pretty flat over the previous 4 quarters, but back down again in Q4. Rents fell 1.7% year over year. Vegas was the only large metro in the country to cut rents in 2012. And over the past 5 years, same-store rents in Vegas have plunged 17.2%. Now let's try to end on somewhat of a high note. Let's take a look at the Metro's 5 key upper-tier submarkets. And the story really isn't too bad here on the occupancy side. Most are right around 94%. Rates are significantly weaker in the Metro's most affordable areas. But as you can see, even these areas with decent occupancy rates aren't doing much at all on the pricing side. And these are some of the areas that are, of course, most vulnerable to losing people to home purchase. Now, the big question, will 2013 be any better? And the answer, well, it should, because, well, things can't really get much worse, right? Well, for full disclosure, we said pretty much the same thing going into 2012. But nonetheless, we're forecasting occupancy to climb 90 basis points all the way up to 91.8%, and for rents to improve 0.5% in 2013. And that wraps us up for Las Vegas. So until next time, for Apartment Market Dynamics and MPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.